Winter season for startups. What you've seen is mass layoffs in the tech world, and it's not just startups in India. Look at Meta, highest ever layoff by a tech company. Alphabet is talking about it. Microsoft is talking about it. Back home, look at the news that we've got from a BYJU'S to an Unacademy, to many, many more. So even though there's a winter season for startups, what you're also seeing is a comeback story in the public markets of the new age companies. Look at a Zomato share, for example. Look what happened with a Nykaa. Look what's happening with a Policy Bazaar. And in the middle of all of this, what we've seen is Morningstar come out with a unicorn index. This unicorn index actually has 25 unicorns that were minted in India. Morningstar has observed that 10% of all new unicorns being minted are actually from India. What is Morningstar's plan? Is it providing an opportunity for all of you to maybe invest in tomorrow's future or to enter these new age companies in the private markets? Think Swiggy, think Meesho, think ShareChat, think BYJU'S, and many, many more. That's exactly what I'm going to be discussing with Sanjay Arya of Morningstar Index, who's joining us all the way from Chicago. Agreed to do this recording, stayed up till 1 a.m. So we really, really appreciate that. Good to have you here in ETNOW. Glad our calendars could sync up. We really, really appreciate you staying up to just talk to the Indian audience here on ETNOW. So let's start with this. 25 unicorns have made it to the Morningstar Index. Why only 25? We're going to play the 25 names as graphics on our screens for our viewers, so they'll have the list with them. But what has been your criteria? And, can I think of this maybe as an ETF, a private ETF that we can all invest in?
Yeah, Nayantara, good to be here and, excited to share this announcement with you guys. Unicorns, as you know, I think these are companies, private venture-backed companies that have reached a valuation of $1 billion. And if they needed more capital, beyond a certain point, you needed to go public. And today, there's plenty of capital available for these companies. So these companies are staying private much longer. It used to be 5 or 6 years before they go public. Today, that number is about 11 or 12 years. And, these are companies that are truly like innovation incubators, which are trying to solve a big problem in the world, or they are trying to be disruptive in a particular industry. And, this is really caught on globally. Today, when the term was coined back in 2014, unicorn actually symbolized something that was rare. So there were not that many privately backed companies that were $1 billion. Today, that number has gone up to about 1,300 companies globally. And there's roughly about $4 to $5 trillion in total market cap. And that, growth has been explosive. And India has been a great part of the story as well. We've seen in 2014, when the term unicorn was coined, there were, I think there were about 4 companies that were unicorns. Today, that number has gone up to about 70. And, it's it reflects, the dynamism in the industry that is actually happening there. And the index we launched, the India 25, it picks up the top 25 companies, top 25 unicorns by their market valuations. So with 25 companies, I guess it represents kind of more or less broadly the whole industry or the whole marketplace. And, this index is going to be calculated on a daily basis as well.
So when you're doing, Sanjay, to interrupt you there, when you're saying you're doing this on a daily basis, how do you collect your data? Now, it's a winter season. It's also the season of markdowns. So when you say daily tracking, what does that mean? That basically when there's a fundraise announcement, if there's a primary or a secondary?
Yeah, so Nayantara, one of the things which Morningstar actually, as an organization, we own a company called PitchBook. And PitchBook is actually the leading provider or aggregator of private company data. So they gather information on private companies. They do a lot of research. So they have information on every deal that actually happens in any of the private companies. So we gather that on a daily basis. And we've created a proprietary pricing model that looks at the last funding round, the last valuation that happens in a company. And in addition, we look at some of the comparables that are happening both on the private side and on the public side. So there's a lot of information available out there that we try to aggregate into this model that actually looks at more holistically what's happening in the market. It kind of gives you an indication of what the reasonable, realistic value of these businesses should be. So, like funding rounds happen once every 18 months. And, a lot can happen in 18 months, as we know, especially in the last 18 months. But if you look at public markets, they kind of give you a lot better sense of where some of these valuations should be. So it's a mosaic that we build using some of that pieces of information.
Okay, so that's PitchBook that Morningstar had acquired to help and get daily tracking of prices in the private markets. Now the next big question, if people want to participate in the private markets, if they feel that, okay, bottoming out, about to bottom out, maybe they don't want to time it, maybe they want to do it a year from now, maybe they want to do it a month from now. I'm not getting into that. The question is, how do Indians buy into the Morningstar Index?
Yeah, so I think that's an interesting conundrum. At this point, I don't think there's easy ways to kind of invest in aggregate in this index. So it's not like a passive index that can be transformed into an ETF. But over time, I think we see kind of the market infrastructure, at least in some markets, kind of improving, where there are secondary markets on which a lot of these unicorns are actually beginning to trade. So these unicorns are actually pre-IPO companies. So there's a lot of interest, and there's also a lot of interest from the owners of the company, the employees or the early VCs who are looking to gain some liquidity in these companies. So there are platforms which are actually beginning to allow you some of that ability to kind of trade, but nothing at the moment that would facilitate an easy implementation of the product. But again, I think the infrastructure is kind of evolving fast, and we hope in the next few years it'll actually become a reality. The other thing I would say is, these are obviously companies which are late stage private equity, which are looking to go public. So I guess having information about these companies before they go public, I think it'll actually be very useful for retail investors.
Okay, I'm going through your press release where it also says diversification has been an important trend and factor to watch out for, and that has been reflected in the index. Talk to us a bit more about this.
Yeah, so I guess when you look at the industry in India, first of all, I guess a lot has happened in the last 5 years or so. Thanks to the support from the government, I guess, in terms of encouraging private investments. Technology has been a big enabler, and then more recently, I guess, during the pandemic, I guess people have become a lot more comfortable with some of these technologies or some of these businesses. And we've seen, I guess, as far as the diversification is concerned, it used to be all IT type companies in the past, about 90% of that. But currently, there's maybe 60% of the businesses are B2C. So companies that are in the food delivery or mobile pay, things of that nature, which are kind of leaning on consumption demands, they've actually kind of grown quite a bit in the last few years. So we are seeing kind of broadening of sectors or businesses that are actually entering the unicorn space.
Why such a heavy weightage on the B2C businesses, nearly 60%? Companies like a Swiggy that you have talked about, a BYJU'S, a ShareChat, that's all part of your press release. What about SaaS? SaaS is so hot since 2020. Has it got less weightage, primarily because of the global factors at play? Meta's laying off 11,000 people. How can SaaS not be impacted? Is it for reasons like that? I just want to understand why B2C, because these are also the ones that are bleeding the most. These are the startups that have relied primarily on VC funding to give to Google, Facebook to onboard customers.
Yeah, I guess it's not that SaaS has become less important. It's just the B2C, because of during the pandemic we saw people were sitting home, and a lot of behaviors changed during that time. They became a lot more comfortable using kind of retail transactions over the phone, be it home delivery, be it online retail, be it mobile pay. So there's a lot of themes that actually shifted during that time, and that's become a bigger part of the overall kind of the unicorn economy, if you will, just kind of leashing the power of entrepreneurship. People who are just India is a huge market. So the retail buyers who are actually anybody who has a mobile phone today, they can actually kind of participate in that. So definitely, I guess that the whole pandemic was a huge factor in terms of promoting the B2C segment of the market.
Is that something you're going to be open to? Like if you're doing daily monitoring of pricing, will you do daily monitoring of the sectors that are hot? I understand it doesn't have to be daily, but it keeps changing, right? You have an OYO also, for example. You have an OYO in your index as well. We know that OYO is going in for an IPO. So when you remove an OYO from this index when it IPOs, how will you replace it with a new one? How will that work?
Yeah, so when a company goes public, it exits the index, on the day it goes public. And we, on a quarterly basis, we actually look at, the next 25 largest companies that are eligible to go in the index. So once every quarter, we look at, the pecking order, the biggest companies they make into the index.
Okay. So Sanjay, no plans as yet to convert this to an ETF to get any way for retail investors, the shock absorbers of the stock markets to invest, because we have seen the proliferation of the private markets as an asset class. That started to happen in 2020.
Yeah, so I think I wouldn't rule that out. I think it's not an ETF worthy structure, but there are other ways to kind of do it. There are some banks who have been in touch with us who are looking to create swap exposure or synthetic exposure. There are other ways so in the foreseeable future, we'll definitely see a means to invest in these segment of the market, but nothing today as of today.
Okay, Sanjay, thanks so much for joining us here on ETNOW, telling us more about this unicorn index. And once again, thank you for staying up late for us to record this.
Great. Well, thank you so much for your time. Really enjoyed it.